All right, welcome back everyone to the deep dive. Let's dive right in today. We're going to be taking a look at quarterly tax payments.
Always a fun topic.
Oh yeah, definitely a crowd pleaser. But seriously, today's focus is on making sure you're paying enough throughout the year to avoid those nasty penalties, from the IRS.
Absolutely.
No one wants to deal with that. So we're aiming to make this whole quarterly tax thing a bit clearer and, well, hopefully less scary.
We've been looking at all sorts of financial and accounting stuff recently, and one thing keeps popping up over and over.
What's that?
You've got to be on top of your taxes all year round.
Can't just wait till the last minute.
Exactly.
Makes sense. I mean, have you ever gotten a surprise tax bill, like, way bigger than you thought it would be?
Oh, yeah. Happens all the time.
And often that surprise comes with a penalty, too.
It's a double whammy.
Not fun at all. So whether you're freelancing, running your own business, part of the gig economy, which seems like everyone is these days, or just have some extra income from investments, understanding this whole quarterly tax thing is crucial.
Couldn't agree more.
All right, so let's start with the basics. Why do we even have to pay taxes quarterly?
Well, it all comes down to the way the U.S. tax system works. It's what they call a pay-as-you-go system.
So as you earn, you pay.
Basically, the government wants a steady stream of tax revenue coming in throughout the year.
Keeps things running, right?
Exactly. Instead of everyone waiting till the very end of the year to pay up all at once.
Makes sense from their perspective. But why specifically quarters? Why that time frame?
Good question. It's essentially designed to mirror how taxes are typically taken out of a regular paycheck.
Like withholding.
Yep. So if you have a traditional job, your employer withholds taxes from each paycheck and sends them to the IRS throughout the year.
We're all familiar with that.
Right. Quarterly payments are kind of like the DIY version of that for folks who aren't getting taxes withheld regularly.
Or those of us who aren't on a regular payroll. Okay, so it's all about keeping the tax revenue flowing steadily. And speaking of non-payroll income, this is often where Form 1099 comes into play.
Definitely.
So just to clarify for our listeners, a 1099 is usually the form you get when you're paid as an independent contractor or for other, non-employee type gigs.
Right.
So if you see a 1099 in your mailbox, chances are you need to be thinking about quarterly taxes. And the big question is, what happens if you don't keep up with these quarterly payments?
Well, that's when the IRS can hit you with penalties.
Penalties, ugh. So are these penalties like a flat fee or something? Or did they get worse the more you owe and the longer you wait?
It's definitely not a flat fee. It's usually a percentage of the unpaid amount. And yeah, the longer you wait and the more you owe, the bigger that penalty gets.
Ouch. Okay, so we definitely want to avoid that.
Right.
Now, who exactly needs to be paying these quarterly taxes? I mean, is it everyone who makes a little extra money on the side?
Not necessarily. The general rule is that if you think you'll owe at least $1,000 in taxes for the year from income that isn't subject to regular withholding, then you should probably be paying quarterly.
$1,000. So there's a threshold.
Right. And this includes things like self-employment income, investment income, dividends, any income you're getting where taxes aren't automatically being withheld.
Right. So it's basically for anything outside that traditional employment setup.
Exactly.
And it seems like, with the rise of the gig economy and remote work and all that, more and more people are finding themselves in this situation.
Absolutely. The whole way we work is changing, which means more people have to manage their own taxes this way.
It's definitely a trend. We even saw, remember in that M&A playbook we looked at, they were talking about acquiring companies with like 90% plus remote clients. Shows you how big this whole remote work thing is becoming. Okay, so let's say you've figured out that, yep, you need to be paying quarterly taxes. The next big question, and probably the one that causes the most stress, is how much is enough?
That's the million-dollar question, right? How do you figure out how much to pay each quarter to avoid those penalties?
Yeah, that's the key.
Well, the IRS has a couple of benchmarks they use to decide if you've paid enough. One way is to pay at least 90% of your total tax liability for the current year.
90% of what you think you'll owe for the whole year.
Right.
Okay. That sounds a bit tricky, especially if your income isn't super consistent. It's kind of like trying to predict the future.
It can be a bit of a guessing game, for sure.
Yeah.
Especially if your income fluctuates a lot.
So when would going for that 90% make sense? And when might it be better to play it safe with the other option, even if it means maybe overpaying a bit during the year?
It's a good strategy question. Aiming for that 90% mark might be appealing if you're pretty confident that you'll earn less this year compared to last year. and if your income is relatively predictable.
So you're aiming to pay a bit less overall.
Exactly. But if your income is all over the place, or there have been, big changes in your life that could affect your taxes, then using the second benchmark might be a safer bet,
Which is?
paying 100% of your total tax liability from the previous year.
Ah, so you use your last year's taxes as a guide?
Yep. That way you're working with a known number.
Seems simpler in a lot of ways. But I think there was a little caveat for people with higher
I
incomes,
mean,
right?
you're right. If your adjusted gross income last year, that's basically your income after certain deductions was over $150,000, then you actually have to pay 110% of last year's liability.
Okay, so a bit of a higher bar for higher earners.
Exactly.
Got it. And it's worth reminding everyone that these are just general guidelines. It's always best to, talk to a tax professional about your own individual situation. Now, let's talk about how you actually figure out how much you should be paying each quarter. I mean, where do you even start?
Right. So you need to come up with an estimate of your total tax liability for the whole year. That includes your regular income tax, of course.
Makes sense.
But if you're self-employed, you also have to factor in self-employment tax.
Ah, right, because that covers Social Security and Medicare taxes.
Exactly. And when you have a regular job, your employer pays half of those taxes.
It's a shared responsibility.
But when you're self-employed, you're responsible for the whole thing.
You're both the employer and the employee.
Exactly.
Makes things a bit more complicated.
It does. And to get an accurate estimate, you really need to keep track of your income and expenses all year long. This is where good financial habits are so important.
Can't just stuff those receipts in a shoebox.
Not if you want to avoid problems come tax time.
Makes sense.
And a lot of businesses use accounting software to help with this. Things like QuickBooks Online, which we've seen mentioned in a bunch of different SOPs.
Those standard operating procedures.
Right.
So good record keeping is essential for figuring out how much to pay each quarter.
Absolutely. The more organized you are, the better your estimate will be, and the less likely you are to underpay and get those penalties.
Okay, so you've crunched the numbers and you have a good idea of how much you need to pay. Now, when are these payments actually due? The deadlines always seem to sneak up on me.
The IRS has a pretty standard schedule for quarterly tax deadlines. Typically, the first payment, which covers income from January through March, is due around April 15th.
Same as the regular tax deadline.
Exactly. Then the second payment for income from April and May is due around June 15th.
Okay.
The third quarter for income earned from June through August is usually due around September 15th.
Got it.
And then the final payment for income from September through December is typically due around January 15th of the following year.
All right, so you've made your initial estimate and you're dutifully making those quarterly payments. But what happens if your income changes during the year? Like, what if you get a big new client or, things slow down unexpectedly? Do you have to stick with your original estimate no matter what?
Not at all. The IRS understands that things change. So if your income goes up or down significantly, you can adjust your payments for the following quarters.
So there's flexibility.
Absolutely. You just need to reevaluate your income and expenses and figure out a new estimate.
Got it. So it's not like you're locked in at the beginning of the year. You can adapt as needed. How often do you think someone should, check in on their income and make sure their payments are still on track?
If your income is pretty steady, then reviewing everything once a quarter before each payment is due is probably enough.
Okay.
But if your income is all over the place or something big happens, like you land a huge new contract or have a major expense, then you should definitely reevaluate things sooner rather than later.
Be proactive.
Exactly. It's all about being adaptable, which is something we see emphasized in sales training too.
Makes sense. You got to be ready to adjust to changing circumstances. Now, we've been talking a lot about individuals, freelancers and self-employed folks. But what about businesses? Do they have to worry about quarterly taxes too?
Oh, definitely. Businesses have to make quarterly tax payments as well.
Same idea, basically.
Pretty much. But they might have other taxes to worry about in addition to income tax.
Right.
That's just a standard operating procedure.
So it's a given in the business world.
Absolutely.
And just to clarify, for folks who are employees of businesses, their federal income tax is usually taken care of through payroll withholding, right?
Right. That's why it's mostly people with income outside of a traditional job who have to actively manage their quarterly tax payments.
Got it. So it's really about knowing where your income is coming from and whether you need to take those extra steps.
Exactly.
All right, let's wrap things up. The main takeaway here is that paying enough in quarterly taxes is super important. It's not just a suggestion, it's how you avoid penalties and stay in good standing with the IRS.
Couldn't have said it better myself.
And it all comes down to really understanding your income, making a good estimate of how much you'll owe in taxes, and then, making those payments on time throughout the year.
If you can do that, you'll save yourself a lot of headaches down the road.
Absolutely. Being proactive and organized with your finances can make a huge difference. So, to our listeners out there, I'll leave you with this. Are you confident in your current approach to quarterly taxes?
It's a good question to ask yourself.
Take a moment to think about it. Maybe compare your income projections to last year's taxes. Or, even better, chat with a tax pro to make sure you're on the right track.
A little bit of effort now can save you a lot of trouble later.
As we always say. And hey, if you need help managing your finances and making sure your taxes are in order, there are companies out there like Indenaro who specialize in this stuff.
They can definitely make things easier.
Absolutely. All right, that's all the time we have for today's deep dive. Thanks for joining us, and we'll catch you next time for another insightful exploration.
See you then.